you so much.
I think we're there.
Yep. Want to get started? You want to share the slides?
Absolutely.
Wonderful. Welcome all to Getting Started Investing Locally, the Community Investor Accelerator for 2026. My name is Len Bartel, and I have the pleasure of working with Travis on the Community Investment Project. I come from, a couple, 15 years or so in the community kind of place-based philanthropy space, first at a health conversion foundation, and then for 6.5, almost 7 years with CF Leads, working nationally with community foundations to build capacity to take on greater community leadership. And community investment and impact investing is a growing component of community leadership. So a little bit about Community Investment Project, for those who may not know. Really working to build capacity, the understanding, the skills of boards, of staff, to take on impact investing projects. And you'll hear two examples today of folks that have gotten started, what were the questions they asked, where their programs are today. And so it's also a process of facilitating peer learning and networks. For those of you who are familiar with CF Leads, peer learning is a core component of the work, and really came to kind of value and honor that way of learning. And so what Travis has built here with the Community Investment Accelerator cohort experience, I couldn't be happy enough to help participate in that as a coach when it launches. And then lastly, Travis, his work speaks for itself, but helping institutions really to develop those strategies. So that in a nutshell is what the Community Investment Project is. It's my pleasure to be part of this, and I'm going to hand it over to Travis. It sounds like, for those who were on at the time, that this is going to take a kind of an interview style, and so I'm going to let Travis interview the speakers and get us started. Thank you for
Great.
joining us.
Thank you, Lynn. And it's so wonderful to be here with so many different foundations from across the country. And um, Rosalie Cates is here, and Rosalie loves to do introductions, but this is the size of a meeting unexpectedly that we won't be doing that. But please do throw in the chat where you're connecting from today. And many impact investing peers looking to get started in this work. Um, Len, thank you for welcoming us, and I'm excited today that we're going to be joined by Rebecca Gilliam from the Wayne County Foundation in Indiana, and Mark Roberts from the Community Foundation in Central Illinois. And we're so excited that Mark brought with him his past board chair, Chris, who's sitting in a car right now, but I think will um, help underscore the point of how important it is to have your board as a part of your conversation about impact investing. And I will be interviewing them here in a bit. But before we dig into that, I wanted to provide you all a bit of context about how foundations get started in this work. And we're going to hear from both Central Illinois and Wayne County about their pathways to getting started. But I will acknowledge that foundations take a lot of different paths into impact investing, but there are some kind of common shared components that we've learned about for doing this work now for about a decade. So what are those pieces? And the one other piece of context I want to provide going into this conversation is, and for those of you who haven't been with me in previous conversations, that impact investing is a huge field. We're talking about trillions of dollars in global economies that are somehow being aligned with investors' values. By and large, sorry, uh, the largest component of that work is being done through ESG investing or screened investing. A lot of health conversion foundations, for instance, um, don't like to own stock or tobacco products. Um, that is the largest segment. We're also seeing foundations do activist investing. That might mean purchasing a stock so that you can show up at a stockholders meeting and express your viewpoint on how the company should be functioning. We're also seeing the growth of topical investing funds. So there are out there low carbon funds, or there are community health funds that you're seeing emerge. Today, we're talking about a very narrow piece of the impact investing field. We're talking about community investing or community impact investing. And this means making investments in your place, in your service area, if you're a foundation, into local companies, organizations, um, to both create a financial return to your institution, but also to create a measurable community benefit. And we'll hear from the speakers today about what are the kinds of investments that they're thinking about and how are they assessing both that impact in the transactions that they are looking at, and also how are they seeing the financial return coming back to the foundation. So, how do foundations get started in this work? And I'll start where Len started, which is with a community leadership culture, right? So, for those of you who are joining us from a community philanthropy space, community foundations, you might know what community leadership means. But in this context, it means kind of centering your community and your community stakeholders as your primary constituent and the population that you're serving in your work, right? Um, and that is kind of a necessary precursor to going down this path and thinking about how you show up and engage community members in your process. Another essential component of doing this work is board engagement. And as I mentioned, I'm really glad we have Chris here today because fundamentally this work involves your policies as an institution. It involves your investment decisions. It involves conversations with your investment committee, right? And so that all happens at the board level in health conversion foundations, community foundations. It also includes what I've called economic development philanthropy, and I realize that that might be a bit jargony. But I think the foundations that are most successful in moving into impact investing, this kind of community investing work, are foundations that have accepted their role not just in what you would call the traditional community development domain of philanthropy, um, or kind of the notion of what foundations were 20 years ago, right? But a foundation that sees itself as playing a role in the economy of your place and helping, all kinds of families in your community get ahead, right? So kind of centering that role in housing and in childcare and in living wage work in your place, right? Those are things that you're going to be thinking about and talking about as a community investor. And then, of course, a culture of community and partner engagement that comes from community leadership culture, but what you'll discover as a community investor is you're showing up in new rooms at new tables and having different kinds of conversations, and having a culture of kind of engaging with community in that kind of process. I think is essential to your success as an impact investor. So the pathway for foundations going through this process usually starts with identifying objectives. What do you hope to achieve by being an impact investor? And guess what? That's not just impact, right? There are a whole set of other things that you might be pursuing. For community foundations, there might be some hope of donor engagement as part of your process. The second step is defining impact. What do you want to achieve in your community by doing this work? Identifying your source of funds. Where does the money come from to do this work? And that can be a surprisingly complex conversation for your community foundation board or health conversion foundation board. Um, the fourth step is design your ideal investments. What do your investments, what might they look like? What sectors are they going to be in? How long is your capital going to be out the door? What will the financial return look like? The fifth step that we most often see foundations take in this process is creating a success management process. And um, this might, in another PowerPoint presentation, be called risk management. But there's so much more that a foundation is doing than just assessing a risk of an investment, right? There's questions about impact. There are questions about mitigation of harms that the foundation might want to avoid. So what does that process look like for your foundation? And from there, foundations start to initiate sourcing transactions in their communities, and then also speaking more broadly about their programs to their partners. The last thing I wanted to share, and I know some folks on the call today are thinking about the Community Investor Accelerator, others are not. All are welcome here, but I did just want to provide a couple of details about the Community Investor Accelerator, and then I'm offering to stay after the call and answer any questions you might have about this program. Um, the Community Investor Accelerator, and by the way, for those of you who are interested in this, the intent to participate form is now live on the website. And we've actually already had one foundation enroll, which we're excited about. But this is going to be an action learning network for 4 to 6 place-focused foundations. So again, community foundations, health conversion foundations, family foundations are welcome to participate in this. The process is designed to move you through the exploration, unlocking to the precipice of deploying capital in your community. And the way we do that is we're going to be having 6 half-day virtual workshops each month in early 2026 around some of the topics that we just mentioned. And those workshops are going to include practitioners from foundations that are already impact investors and can talk about how they're doing this work at their foundations and in their communities. In addition to those workshops, there are going to be tailored coaching sessions just for your foundation to start building the tools that you need to be an impact investor. So for your investment policy, a scorecard for opportunities, communication tools for your community. One last thing about the accelerator process, just like I was saying in terms of the other foundations that adopt impact investing, this is a whole foundation undertaking, right? So we're asking each foundation to assemble a core team of ideally 5 to 9 members that includes staff, board, potential committee members. And those folks will likely spend 40 hours over the course of the year as a part of the accelerator process. Staff will have to plan additional time in the development of policies and tools for the foundation, as well as be prepared to engage a foundation attorney and your traditional investment advisors. Um, the program costs $32,000 per foundation, but a lot of foundations find donors and or other grant makers that can help defray the cost of this programming. There's a special program for Kansas foundations that are interested, but happy to talk about that cost with folks who are considering the program. And again, the intent to participate form is now live at investmentproject.org and is there through December 15th, and that's the deadline for participating. And I've already discussed some of the things that you will accomplish. Um, any pressing questions before I start bugging our volunteer foundations? And as I mentioned, I'll stay after the session to gladly answer any other questions about the accelerator. All right. Let me pull down my slides and then bring up the videos of the folks that we are going to talk to. All right. Give me a moment. Pin. Oh, there are too many people here. Uh, um, there's Chris. There's Mark. All right. See, this is what it takes to get board members involved when they're driving across town. All right. Well, Rebecca, we'll start with you, and then we'll pivot to Chris and Mark. But I'll keep you guys all kind of highlighted during this, and feel free to come off of mute whenever you have a kind of a burning thought that you'd like to share. But Rebecca, thanks so much for joining us. And can you start by telling folks a little bit about your foundation, you and your place, just so that we can get a context, recognizing that foundations are working in many different kinds of communities. Um,
Absolutely. I'm Rebecca Gilliam. I'm the executive director of the Wayne County, Indiana Foundation. There are other Wayne County foundations, so that's fun. And Wayne County is a fairly rural community. We have this matter 14 incorporated towns. Our largest one is Richmond, Indiana, and it has about half of our county's population is in the town. The rest is throughout the county. Um, we we're actually an older foundation. We were founded in 1978. So for Indiana, that's a little older. And we were formed like a lot of other ones with interested individuals, families, business leaders who are really excited about the opportunity to pool resources, do grant making, make an impact in our community. Predominantly quality of place initiatives were the early things that we were interested in. And then we followed the pathway of scholarships. And now we are all in with our role in community leadership.
Great. I think it's so interesting how different foundations end up thinking that impact investing is something that they want to think about or pursue. How did your foundation um, arrive at that decision? And then kind of what were your steps that you took to get started in impact investing?
So interestingly enough, so I joined the foundation in late 2019. About 9 months ahead of 9 to 12 months ahead of my joining, our board was already wrestling with the idea of how do we become a stronger community leader. We were well respected, we had a lot of trust, but we were pretty passive, responsive. When I walked in the door, I was told we were the best kept secret. I'm sure some of you have heard that as well, in your areas. And and whereas we don't want to be the center of everything, we certainly don't want to be a secret either, especially since we are entrusted with so many resources and funds that the community saw value in donating and preserving. How do we put that back out into the community in an effective manner that strengthens and ultimately grows our quality of place? So in late 2018, we actually established, it's not its own independent organization. It's under the umbrella of the foundation, and an initiative called Forward Wayne County. And it was really formed to bring together leaders from a wide variety of industry and parts of the community to research, identify, and work on projects that relate to countywide community development needs. And so, from some of that early research, educational attainment, workforce readiness, downtown revitalization, and early childhood education were some of the key priorities that were identified through all of these conversations. And then we really wanted to bring together cohorts that really dug into those issues in a collective model to really try to produce action, how we could really impact those areas, in addition to what kind of funding we could bring to bear on that. And honestly, in the front end, this whole movement for our foundation was really to provide convening, thought leadership, bringing the right people to the table to try and find solutions. It has continued to move forward as we started to try and consider, well, how do our resources and assets come to bear? And that's what made us really get excited about how something called impact investing. And at the time, we're like, what exactly does that look like and mean for us? But we were trying to find a way to activate some of these amazing ideas in our community, and grant making wasn't enough. We couldn't really get there through our traditional grant making channels.
Great. And I didn't tell you, Rebecca, that I was going to do this, but I think it would be helpful to bring Mark and Chris into the conversation to hear a bit about their context and what prompted their foundation to get started. And um, can you guys share a little bit about your foundation, yourselves and your community, and kind of what made this front and center issue for you all in Central Illinois?
You bet. I'll start that out. And Chris, if I'll throw it to you if you'd like to talk a little bit more about the community. Chris is our head of our local EDC, and so he has, as all of us do in this community, has his finger on the pulse of what's going on here in a way that many others don't. But I just want to say hello to all of you. It's great to see all of you from across the United States. So good morning, good afternoon. And I saw even one individual that's in Spain at the moment. So good evening. It's happy hour time for that person probably. So it's great to see you from all over the world. Welcome or hello from beautiful Peoria, Illinois. It's a lovely day here. Community Foundation of Central Illinois. We are 40 years old this year. Late December will actually be our 40th anniversary, established obviously in 1985. I have been in this position for 17 years now, so there's a little bit of institutional history. I've been pleased to see what we've done in this organization. And we've grown to an organization about $85 million in assets today, with a ripe pipeline full of expectancies and promised gifts and a hope of a lot of other things. We are among the fastest growing community foundations in the state. We serve a 50-mile radius around the city of Peoria, which is, I don't know if you're familiar with Illinois, but Peoria is more or less in the middle, a little bit sort of northwest of the middle of the state. So we serve that 50-mile radius. We granted about $7.5 million last year to our community through all the different ways, as we know that community foundations grant. And um, so that's a little bit about us as a community foundation. Chris, you want to throw in a few words about this area in which we serve?
Yeah, well, thank you all, and greetings from the backseat of a vehicle traveling back from Rochester, Minnesota to Peoria from a business trip. So I appreciate the opportunity to talk to you all. I am the now past board chair, which is the best officer position to have on a board, is the immediate past chair. I'm the chair of our impact investing committee, and yeah, as Mark pointed out, kind of by day, I'm the CEO of our Greater Peoria Economic Development Council, which gives us some additional information as a community foundation about what's going on. I would hesitate to agree with Mark that I have my finger on the pulse of everything, but try to do my best. And our region is to the extent you've heard of Peoria, those of you who are not from here, we are the hometown of Caterpillar and really a strong manufacturing base here in the heart of the Midwest. But also, a very large healthcare infrastructure. Actually, why I'm on this trip is I was up at Rochester with a couple of my colleagues to talk to folks at the Mayo Clinic about what it's like to have a healthcare-centric economy, and that's really what is being developed in the Peoria area. Our community, from a community foundation standpoint, it is not unlike a lot of what are often referred to as Rust Belt communities that have some, a lot of opportunity, but also like some persistent pockets of poverty. We have some areas of significant disinvestment. These are all things that the Community Foundation is trying to address through its grant making. Maybe 2 years ago, we started talking about how can we leverage our assets. We didn't have 85 million at the time. It's been kind of a good couple of years to be in the foundation business from a growth perspective. But really, how do we invest in all sorts of things through, stocks and bonds and all the other things that our great investment committee does. So how could we leverage just a small portion of that in order to make an impact on our community, but think about it differently, not in the granting cycle, but in the investing cycle. So our community has about 400,000 in our metropolitan statistical area, so a little bit bigger than Wayne County Community Foundation. Our principal city of Peoria has about 115,000 people in it. So yeah, that's a little bit about our community.
Oh, thank you. And thank you, Chris, for joining us today. And I didn't realize this when I invited you both to participate, but your foundations both have really remarkable relationships between your economic development functions in your community and your philanthropic activities, which is curious. Rebecca, turning back to you and kind of the context of that work that you were doing when you recently joined the foundation, um, you know, uh, what steps did you take to become an impact investor? And then maybe if you could share a little detail, a little color about what does that look like today, right? How how might your foundation look different than a normal foundation because you are an impact investor today?
Okay, so, you know, we are in our community, as you heard from the size, we're actually a really large institution for a very small community. So we have a lot of the same issues of big communities, we have declining populations, we have poverty, we have lower educational attainment, we have a labor force that isn't meeting the needs. And yes, we have an excellent relationship with our Economic Development Corporation, as well as our chamber, our city and county government, and business leaders across our community. So we really were trying to figure out how we could tackle these large scale needs and recognizing that as the community foundation, we're sitting on a large amount of assets. We're similar to the others were about 85-ish million. That's a lot. And we recognized that we had a responsibility to figure out how we could bring more of those resources and really get them to work in our backyard. But we knew, I'm not an expert in this area. I care greatly about my community. I actually took this job. This is my hometown. I lived away for over 20 years and working in other nonprofit work, but not in this field. And I recognize this incredible opportunity to come back and work right here in my own hometown where I think there's a ton of value and a ton of opportunity. So we sought out a cohort, much like what is being talked about today, where we came together with a number of other community foundations and really started digging into what a program like this could look like in Wayne County, serving the needs of our specific community. So I got my board was all in. We joined a cohort and we undertook about a 9-month learning and planning process that helped us understand the breadth and depth of impact investing. We also, through this process, which was invaluable, we spent time talking to our donors. We needed to know whether our donors would be receptive to this sort of a project, to this type of initiative, because we were exploring where all the funds could come from to make this viable. So that actually paid dividends in a whole lot of ways, but this was an incredible opportunity to spend time with our donors. And then we of course went to all of our local leaders to get feedback, created our guidelines, and then spent time in every board meeting really digging in, getting down into the weeds of what this could look like for us, we were comfortable with, and how we could lean into this type of work and the role that we could play across the county. By the end of that whole process, we actually had the whole package of documents that we felt very confident that we could at least move forward and identify a project to invest in. And I had broad buy-in from the community, donors, and my board.
And the second part of that, Rebecca, if I were to walk into your foundation today, what does impact investing look like? Maybe an illustration of an investment that
Sure.
you're making.
So, we've only been at this a few years. For us, the easiest has been in the space of doing loans, fairly low interest. I'll say they actually turn out to be pretty low risk loans. We're working with some housing groups, they're nonprofits. We have some pretty depressed neighborhoods that have there's opportunity. Actually, the one we're in the middle of right now, 10 years ago, they received funding for blight that would enable them to remove all about 20 blighted properties. So we've had vacant lots for about 10 years. We're able to pull together with some state funding, some tax credits, and then the foundation put in some capital as a loan, a low interest loan that's going to really accelerate the rebuilding of 20 homes and they are moderate income, so 150 to $200,000 homes. And some of these dollars that we've been able to find are going to be able to help kind of buy down some of the mortgage so that they're able to get a favorable rate and have high success in paying off those loans and on a pathway to home ownership. So it's multi-pronged. It's, revitalizing a neighborhood. It's helping the potential homeowners. And so it's a community benefit. So we see the trade-off of the lower interest rate as a way to get more dollars out the door, do community good, and get a bit of a return that can then be granted out in other ways for other projects.
Exciting. The foundation being an investor in
Yes,
your own neighborhood as opposed to, luxury apartments in Virginia or whatnot.
correct.
That's exciting. Mark, Chris, what were the steps that you guys took to become an impact investor? And if I were to show up at the foundation today, what does doing work differently look like now at the foundation because you've implemented a program?
Well, it's made a big difference for us. But let me tell you first about the journey. We first started to try to do this about 4 years ago, um, through my work with my peers in the Alliance of Illinois Community Foundations, and through the interactions with Council on Foundations and others. I knew that it was the right time for us organizationally to start to understand impact investing, and how we might utilize that as an additional tool in our tool belt. But we ran into and we had there was a cohort being found or developed here within the state, or certainly within the Midwest. Travis, I think I remember at that time. And we had actually obtained board approval to proceed with that. We'd allocated the money in the budget. We were ready to go. And we were handed a pretty decent organizational challenge. At that time, we were one of the clients of Greater Horizons, which some of you may know and some of you may not, an operating unit of the Greater Kansas City Community Foundation. And since 2013, we had outsourced a good amount of our back office and other work to them. When they ultimately decided to exit that business, though we had done some sort of plan B planning in advance, we immediately needed to do a whole host of things that some of you CEOs would right now shudder to think about. But we had to implement an entire new CRM. We had to create new policies, procedures, controls. We had to do all of this in about a 15 to 18 month period, which I'm pleased to say we did flawlessly, and it went great. But that meant we were certainly not going to be able to allocate the proper amount of time and capacity to being in the cohort for impact investing. So we had to beg off, but we knew that we were ready. And once that other work was done, we got back with Travis and with Rosalie, and we said, this is the time for us to do this. And so that's sort of the journey that got us to that point. We then looked around the community, certainly talked with the board, and one key thing here is the board has to be on board, so to speak. So you start those quiet conversations, and then you lift those conversations up to a committee or a board level, and you get the consensus that you need to move forward. And once we decided to do that, we then looked throughout the community to find other voices that would add some value to the conversation, from not just economic development like Chris, but a host of other things as well. And that was effective. And so, Chris, you want to chime in there a little bit about the journey and sort of what we saw there? It's about a 9-month journey starting last June, if I remember correctly. He might be frozen. If he comes back, he can chime in. So anyway, we formed a committee, and about 10 individuals. And are you back, Chris? Technology is awesome.
Can you hear me now?
Yeah, go ahead. Please, give it a try.
I'm literally in a cornfield here driving. And I'm going to turn my camera off. That might help a little bit with bandwidth. Can you still hear me here okay?
Yeah, we can.
Can you hear me, Mark?
Yes.
Okay, good. I came into this thinking from my economic development lens that one of our big emphases from an economic development strategy is how do we support our startup community and entrepreneurship. And I thought, let's build a seed fund and let's use the community the course of the 9 months or however long we went through is just the power of impact investing altogether. And so, yeah, we built, I thought, a really good some economic development folks and others that helped really walk us through in a very intentional manner how we could pull this off. And I think that was really important, and regular check-ins with the full board of directors as well. So I believe at the very beginning of the engagement, so we did go through a cohort, by the way. We kind of individually engaged with Travis and Rosalie, and I assume the cohorts are great too, but we really appreciated what felt like very personal from them. But we had an early meeting check-in with the full board so that they would understand, and then closer to the end, another check-in, to talk to the full board about what we were doing. And so it was a really good because it sounds easy to the idea of impact investing, but it is a really different way of thinking about your foundation that's used to granting money with a hopeful outcome, right? You're not granting money to people that don't need it or deserve it or won't use it well, but kind of once the money's out the door, the money's out the door. This is a completely different way of thinking about utilizing the assets, that you have to think like a bank in some regard, right? You are lending money with the intention of it, number one, preserving the capital, but also, getting return on investment. And so that was quite the journey. I think that we learned a lot, and I think we're in a much better position now. And we're just at the beginning of our out to make our first investment. It's been really great. I'll turn it back over.
Yeah, I remember the first meeting of the committee where we sat in a room, and then and Travis and Rosalie had zoomed in. And we all sort of looked at each other and said, we don't even know really what impact investing is, and we can't cite a specific example of what an impact investment is, other than things we've perhaps Googled and looked at various resources. And so that's an interesting dynamic, because you have volunteers that say, yeah, I think we understand, we're ready to do this, and it's going to take some work, and we're going to change the thinking of the organization. And the journey has been a fantastic one for us. As Chris indicated, we are on the precipice of approving at our next board meeting our first investment. It will be, and since it's not approved, I'm not going to share all the details, but it is with a well-established CDFI. We will be committing $250,000 to make loans to very small businesses that otherwise wouldn't qualify for traditional lending. Those loans will be surrounded by a host of business services, supports, credit improvement, and a host of other things as well. And so this is an intermediary organization that we are working with, which really, and they're guaranteeing our investment, they're guaranteeing the return. And so literally it's like the best training wheels way possible that we can think of to step forward and make this investment. So the initial $250,000 has the contingency of an additional $250,000 on top of that, should the initial deployment of that first tranche be done in ways that are clearly driving impact and driving good outcomes in the community. So it's pretty exciting for us. And the thing we haven't talked about is the dynamic of the way the organization is being viewed now in the community, that is very different. During the 9-month journey last year, we spent some time going out to the community. And we do that a lot already, but not in this context, right? So we went to start talking to community leaders about our intentions and what we were going to do and the areas of focus that they thought were important in the community. And like many communities, housing came to the fore, economic development, business creation, and retention, all those things came to the fore. But we created relationships in ways that we hadn't had a chance to do before. And then once we got the program established, we went back to a host of those people and said, here's what we've done. And now what can we do as a community to work together for this? And it's been very effective from a relational standpoint, but it's also going to be effective from an impact standpoint as well.
I would add to that we started to think about ourselves differently as an organization, but others started to think differently about us as well. I think, Rebecca said, we are the best kept secret in Peoria. And I think, Mark, I've heard you say that same phrase, about CFCI. But I think that, and I think we are going to be able to maybe even leverage our this change in our own approach to leverage foundation dollars that we don't control, like so the endowments of our hospital system, or our endowments maybe of our universities, and say, you too can carve off a little bit of this money that you invest in all sorts of things and invest it back in the community. And I think that'll be a very powerful opportunity for the community foundation to say, this is something we started, and it isn't just us now, but all the others that are involved as well.
And one quick note, the CDFI that we're mentioning, again, well established, but hasn't done a lot in this particular geographic area. So they're well regarded, but we're seeing this as an opportunity to be the organization that's stepping out and saying, okay, community, we're putting some money on the table. We're making this investment to help them get more established in this community, to eventually commit personnel. And so let's do it right here. So our banks relationships are low-hanging fruit for their additional investments. Our hospital system that Chris just referenced, we see this as the opportunity to be the standard setter of here's what we think can be done in the community by thinking differently, which is a positive place to be.
That's exciting, Mark. And um, the last question I have for each of you, I think we'll do kind of quick
Hey, Trav,
fire. Oh, yes,
may I say one thing about their process in Peoria? This is Rosalie.
sure.
I just want to say there was a real brilliance to the group that you guys put together to develop your impact investing program. You had the right amount of board, you had important decision makers from the board, but bringing those community members in who really had the ties to the financing projects that would happen eventually was really brilliant. And I can't, I'm only guessing, but I feel that for your board to have these community members, having spent 9 months, becoming actually very sophisticated on how investing works and saying, yeah, we're here, we're doing this, and we see the deals. That was better than just the board making the journey alone. And I think that was a really brilliant part of your organizing of the effort and super fun for us to work with.
Yeah. Thanks, Rosalie.
Wonderful. So my last question for each of the foundations here, and I would encourage folks to put their questions in the chat, and if you all could keep this to 1 to 2 minutes, that would be great, so that we have time for additional questions. But kind of reflecting on your process, what do you think was most important to your success? And given that, what advice would you offer others who are thinking about themselves becoming, or their institutions, I should say, becoming community impact investors? And Rebecca, we'll start with you.
It has to be 100% supported by the board. This is too big of a project it's a rethinking. I think Peoria, you said it very good. It shifts how you think about the work you're doing. It's a yes and. Yes, we're going to continue to do grant making and scholarships. That will look the same for a lot of groups. And we see an opportunity to invest in ourselves, and ourselves being the community. So we want to put money back into the community as a whole to do this work, but without the leadership of my board and the leader, and then bringing other community leaders into the conversation, there was no way we would have received the type of support community-wide, as well as the understanding from donors that this is a way that their gifts can work in two ways. They can work in a very traditional sense, and they can then work in their own backyard to better the community that they ultimately love.
Yeah, I can't support what Rebecca said enough. This has to be a whole foundation lift. You can't do this partially. It is too large. The criticality of it is too significant to your organization and to your community. So make sure you have ducks in a row before you decide to go down this road. We're a staff of 6 here, and we're a small and mighty staff of 6 that execute at a high level. It's a terrific staff, terrific board, terrific culture. We're very fortunate and thankful for that. But it takes all hands on deck to have this thing work the right way, for sure.
Yeah, we're the same size. We're almost identical size-wise. That's about the size of our staff as well.
So I think that's illustrative, though, because it feels like, and I've certainly heard of smaller organizations that have done a great job of this, but it feels like we, from a capacity standpoint, from a maturity standpoint, are at a point where this was a dialogue that we could finally undertake, right, and do it in a way that was meaningful and had the right kind of outcome once we designed it. And so I think that's important. We spent some time getting ducks in a row before we did that.
Well,
that actually speaks to a question.
Yeah,
Thank
great,
you both for all that information. Jeff O'Connell has a question about staffing impacts. So both of you being smaller, how did you weave that kind of programmatic or strategy work across the current roles, or have you added any FTE to support this work?
Rebecca?
So, yes, we were bringing up this initiative called Forward Wayne County, I have a dedicated staff person to that work. So I have a person hired that their day in and day out focus is community development, cohort building, and this was a natural next step for that work that we'd already started. I am with Mark. We had to make the decision that we were all in because it also takes a fair amount of my time to do this work, but I couldn't do it with the other things that we balance on my own. I needed other staff to be devoted to this work.
Yeah, and there haven't been staffing implications for us, but the way that Rebecca and her group is approaching it is frankly more advanced than what we're doing in our community. They have a network that is more broad, that is built, that is taking clearly more of her time to help work on in that space. We'll be getting there, and it will drive staffing implications in the future. But for right now, we're sort of doing what we do over here. We've built new relationships and new partnerships, and I have the correct capacity on my staff to sort of handle financial oversight and a host of other things along with our volunteers. So it hasn't been challenging in that regard.
Great. Thank you both. Jesse Gunn from Whidbey, you had a question earlier around working with intermediaries versus issuing loans. Did you want to come off mute to ask that question or give it any more context?
Hi, yeah, this is Jesse Gunn, Whidbey Island, just north of Seattle. Um, yeah, I don't know if there's any more context other than, we have a small community foundation here on Whidbey growing. We're about 10 years old and have started impact investing. And just wanted to understand through your journeys where your decisions led in terms of working with intermediaries and or if your teams have experience in issuing loans directly, sort of what that has looked like, and just kind of wanting to understand what your process for those decisions was like.
We've done both. So this is Rebecca. So we've done it both ways. We've done some gap loans for some nonprofits that were in the $50,000 range, and we just did that in-house and made it pretty simple. We've also our housing project is working through an intermediary, so it's a multi-pronged nonprofit organization that also has a CDFI associated with it. So we're working with them to manage all of the funds. They'll just have the resources and be able to deploy them. And then I've actually also worked with a local bank when we wanted to qualify some folks and do some loans that way. We were the guarantor. So we've kind of worked in a couple of different ways.
Yeah, as part of our policy, we actually expressed a preference for working with intermediaries whenever that might be feasible, because number one, they're experienced. Number two, they have the infrastructure and the processes in place to help service loans, collect loans if they are loans, or whatever else it might be. And so we're very gratified that this first investment that we are making is with an intermediary. But we'd be open. We've heard already and through our community conversations earlier about the need for bridge loans to some of our nonprofits. As a matter of fact, one just popped up last week that we'll have to figure out what to do with at some point. But again, the issue of housing drives a very different analysis, a very different underwriting. We're looking forward to that because there's a number of important projects bubbling up in the community in that regard. And if we can provide some of that guarantor or gap financing that sometimes is missing, we're glad to be able to do that as well. So in summary, this is fun. As I said, I'm 17 years at the foundation, and we do a great amount of grant making. We make an impact. But to have this new tool as part of our tool belt is invigorating for me, for the organization as well, because we now get to think about how we align investments with some of our grant making as well to really double and leverage the impact, which is a great thing to be able to think about.
Mark, someone asked about the intermediary. I don't think you named them because it's not public yet, but you just used the CDFI, right? Certified Development Financial Institution.
That's right. That's correct. Okay. Yeah, I'm sorry. I'm just until it's approved, I'm just not going to name them, but they're well known.
Yep.
Yes, Community Development Financial Institution, correct.
Yep. I just wanted to make sure that someone had that question. Jeff Pickering, Indian River.
I would only add,
Chris, go ahead.
I was only add, yeah, intermediary is something we would look, but I think partner is maybe a different word. Like, I don't know that we want to be out on our own doing something without a partner. So that could be a bank, where we're filling a gap in a loan. So that's not quite an intermediary, but we want somebody else who's got the expertise in underwriting and vetting these programs, at least early on, until we can kind of build that.
Thank you for adding, Chris. Jeff Pickering from Indian River. Good to have you with us, Jeff. He's wondering how you involve your DAFs in this work. Do they just make a grant into the impact investment fund, or are you permitted to use a specific percentage of their accounts for impact investments? And if you want to add anything, Jeff, feel free to come off mute and add to that.
No, that's pretty much what I'm curious about, just because so much of our grant making is donor advised grant making, but we have very dedicated clients with a lot more capital in their accounts that's just invested in our pools. So I'm curious, does anybody have permission to reach in there and peel some off for these types of deals?
So I can tell you, we opted to not go that route. The vast, little less than half of our assets are unrestricted. So that gave us a nice pool to peel off a percentage. But I won't say never. It's just we don't actually have a separate fund for this. We were very fortunate. We actually had a donor who is very interested in this work. So they had already established a fund that we've been able to tap into and use for these purposes. But all the other pieces are by policy, a percentage of our investable assets we can utilize in this space. And it's really just part of our investment policy.
Thank you. Yeah, and we heard of examples just like Rebecca's where they, number one, have a good amount of unrestricted assets, discretionary assets that they can deploy. That would be a great place to be. Or number two, to have someone in the community or some ones in the community that are willing to sort of seed this initial effort. And we didn't have that either. So we've worked with fund holders and developed policy. We're utilizing 5% of assets that are not our agency funds, that are not our organizational endowments, because at this foundation, they're quasi endowments. So we segmented those out, but we've identified about $1.6 million that goes into our pool that we can use for these investments. And we are increasingly having direct discussions with advisors and other members of the community to come alongside and commit additional resources to sort of co-invest with us. And so again, we're at the infancy, but we're having discussions we haven't had before, and that's good.
Great. Thank you both. Any follow-up there, Jeff? No?
No, great. Lots to learn, though.
Awesome. AJ Reynoso's mic's not working. A question for your impact investing: do you tend to think about returns more in a concessionary way or closer to market rate private credit returns?
It's case by case. And it's also changed. This is interesting. Like my sell, I guess, to the board and others early on was when there were like the market was doing great, but if you just had it in a money market account or just in, being held in your accounts at the banks, I knew we could do deploying it and getting a 5% return was going to be equivalent, if not better, than some of the things that we used some of our cash for. But we really just evaluate everything, and our target would be in the 5% range, but we've gone below that. And we really, it depends on the project and what the community benefit is going to be. Because it feels like grant making too. It's kind of like and.
Yeah. It'll be case by case with us as well, but we're certainly return of capital is number one. Community impact is number two, and some small amount of return on the interest is acceptable. For this deal that we're about to do, it is a 5% return, so we feel very happy about that.
Great. I'm not seeing any more questions. Does anyone have any dying to ask before Travis wraps us up? We will share the recording and the slides. Travis, I'll kick it back to you.
Well, Mark,
Travis,
Chris.
real quick.
Oh, yeah, yeah.
Sorry, real quick. I'd be remiss if I didn't just give a shout out to Chris, our immediate past board chair. He won't want me to, but as you all know that do this work, to have a good board culture and good volunteer leaders like Chris is incredibly important. And for him to be this invested and to take this time to join us from where he is, it's a big deal. And when we have good volunteers, bless their hearts, right? And so just wanted to make sure we lifted him up appropriately. So thanks, Chris.
Absolutely. And thank you, Chris. Thank you, Mark, for coming and sharing your story. And Rebecca, thank you for coming and sharing your story. All your foundations are doing remarkable things, and I'm excited to see where you guys are in 5 years. With that, we're at the hour. Thank you all for joining us. Len, thank you for facilitating. I will stay on the line another 5 minutes answering questions about the accelerator program. If that's something you're interested in, you can also email me at travis@investmentproject.org. And with that, thank you all.
Thanks so much.
Folks, I'm sticking around. If you have any questions about the accelerator, I'm happy to answer them. Yes, Jeff.
Thanks. It's interesting. I mean, I've been familiar with this type of work for a long time. I've been doing this for a long time. I think it's always been on my mind that we would get into it, but not until we kind of are at the right place. So, after 10 years of being here, we were given a pretty good amount of capital by a particular donor to issue as impact investments in some capacity. And so right out of the gate, we've done two basically loans at low interest where we did them traditionally. We had our attorney draft up the closing documents, and one was for the acquisition of a new kind of downtown campus of a child care center that's going to be like the first in our downtown revitalization, and the other is for low income affordable senior housing. And so they don't seem that out of the ordinary. I mean, we give that money away all the time, so lending it out doesn't make my board, any less comfortable. So we've already gone two in, but I've got younger members of my team who are just getting familiar with all of this stuff. So I don't know how much like day-to-day involvement I might need to learn, but would it be the kind of thing where do you require CEO participation fully, or could this be kind of capacity building for team members, or is it both?
A good question. And Jeff, I think the question would also be about kind of where you hope your foundation is in kind of 3 to 5 years with this work. What I would say is the peers in the cohort are going to be showing up with board members, likely their CEOs, staff, and are going to be having conversations about how they ratify investment policies that may expose additional funds to the kind of risk and impact of impact investing. And I think so. I would say if Jeff, you're kind of satisfied with the structure of your program, you're going to just be doing it out of this fund, and you are not prepared to have a board level conversation about exposing additional funds at the foundation to this work. It probably would not be the right way to kind of train those additional members. But if you are anticipating that in the next 2 to 3 years you want to think about how your program grows and you are, as the CEO, willing to kind of participate and show up for those conversations, it might be the perfect time for your foundation to do that.
Yeah, the way I'm thinking about it is against our promises from our legacy society, if we're at 120 million now, we've probably got like 250 promised. But, that's good news, but it's going to take a while. And so the board has said, other than just people giving sooner, is there any way for us to kind of accelerate that capital if it's not going out or away? And so the number we're looking at as strategically is a lot bigger than, $2 million worth of loans. So yeah, it sounds like it might be the kind of thing. We've got a big goal
Yeah.
and we're looking for different tools to get there.
Yeah.
Okay, thank you.
And Jeff, I'm happy to attend an executive committee meeting or staff meeting if those are helpful as you're thinking
Okay.
about it.
Thank you.
Other questions? Lauren, it's great to see you too.
You have one in the chat about is it appropriate to include a member of your chamber or economic development as part of the 5 to 9 member cohort?
Absolutely. And I think, well, I'll say that the one occasion where it might not be is we have actually encountered community foundations where they have a very territorial economic development organization that is very uneasy about the community foundation venturing into that kind of work. If you have a good relationship and that person is kind of a constructive and good partner, then absolutely. Rosalie, Len, I don't know if you have anything you would add to that. Anything else?
Hi, Travis.
Hey,
Uh,
Lauren.
yeah, thank you all for doing this. And I am still working with my executive committee to get on your calendar. I think we are, I listen to folks talk about how they're relatively small and they're a lot bigger than us. So that gives me a little bit of hesitation with our group. And I think what we're going to be exploring is we would love to be ready for the cohort, but I think we need to do more level setting of what we mean by impact investing and just talk through maybe some key indicators of how we would know we were ready to dive into something like the cohort, whether that's now or later. So all of this is helpful learning. And I do expect that the smaller the foundation that you've worked with, I know everyone thinks they're small and it's all relative. Not everyone does, but it's all relative. So I just wanted to share that it's been helpful to further explore and hear from more partners.
And Lauren, if I didn't do this already, if you would like to connect with a couple of community foundation CEOs that are your peer in terms of asset size, and you just wanted to talk shop with them about that, I'm happy to make those introductions.
Okay.
Yeah.
Yeah, that would be great.
Yeah.
Thank you.
Anything else?
Does anyone who's here or in your experience working with anyone have a little they're not necessarily angel investors, but we have a group here that is similar to angel investors, and so they're operating in the world of investing in small and emerging businesses. But they have had a lot of conversations recently about their desire to do more mentorship and have more of a social impact on the community and businesses. And I wonder if anyone has a group like that that's investing capital into businesses in their community. But they actually have acknowledged as a group that financial return is not a primary objective.
Yeah, I've worked with some angels, Lauren. This is Rosalie in Missoula, and boy, it's hurting cats to get them to converge on the same central mission. When they all want to make a lot of money, that seems to get them together, and then they put their, if they
Yeah.
have cohesion around, hey, let's get rich together. I don't mean that pejoratively. I just mean when they're return oriented, they can find common ground.
Yeah.
But when you start getting into impact with them, it's really hard. And a lot of them, I find, just have, if they're angel, they really have a hard time at the end of the day with concessionary returns or what they consider concessionary.
That's
Um,
Good to
But
hear. Yeah,
but you
because
know, that doesn't mean it's not the basis for even a couple of those becoming like, no, I'm going to establish a DAF so we can do local investing. And often it's around something they really care about, like affordable housing.
right.
That
And
might
I
be the glue
and
that binds.
I see a lot of potential for, and our board has talked about this a little bit, for there are certainly some individuals where there's crossover and we want them involved in some
Yeah.
way when we're ready for this kind of thing. But we do have a board member who's deeply involved with that organization. And I think he sees, in fact, I heard him say recently, see, we don't need to do impact investing. Gunnison River Partners is going to do that. And I thought, oh, wow, we have a disconnect on, because
Yeah.
like you say, I don't think that group is really looking to set the same goals on community return that we are. They just want to have a feel good element while they're making money.
Yeah, and it's sort of about the project, you know. If they say, "Oh, you know, top off the Y Capital campaign," and they can, they'll pay the principal back, you know, like,
Hmm.
oh, that kind of project. You know,
Yeah.
it's really not the high tech startup environment, just so rarely.
Yeah.
It's community facilities so often or housing.
Lauren, one example is there's a community foundation in Michigan that is acting as the vehicle for a investors circle where they actually make gifts to the foundation first and then they invest those gifts collectively. So impact is front and center, but I also think it's a way for the foundation to actually forge relationships with those investors and start to have conversations about what kind of investments in our community would um, uh, create the greatest impact. I know it's not an exact analog to what you're discussing, but I think there are some interesting examples out there.
Yeah, I'd be interested to know which foundation that is, if that's okay with them too.
Um, St. Clair County. Oh gosh, I'll find the name and I'll email you their name and Randy Myers is the CEO. Um,
Okay. Thank you.
yeah.
That's Port Huron, Travis.
Yes, Port Huron.
Yeah, I found it.
Yeah.
Found the website.
Randy had a previous career as a movie actor.
As what?
As a movie actor.
Oh.
Anything else? Well, thank you all for being here. My email is always open. I'm always happy to attend staff board meetings, meet with you one-on-one, and answer questions about the accelerator. If you do decide to do the accelerator, the form is due on December 15th. It's at investmentproject.org, and excited to see what you all do. Take care.
Thanks so much.
All right. Bye-bye.